Welcome back to House. So, what we thought we would discuss with you today is how to fund an idea. So, Ellie, I've got the most amazing idea.
Don't we all?
True. But I need money. How do we go about it? So, energy storage. Okay.
Sounds familiar.
Yep. And I need to build a model.
Yes.
For it.
Yep.
And so I can show to people because I need to attract funding.
Yeah.
And as you know, in the energy space, you need a lot of money, millions upon millions of dollars. Who do I speak to? Who do I call? Do I Google someone and find him? Like, what's the deal?
Yeah. Okay, so in summary, you're building a business,
Yes.
you've got an idea,
Yes.
and you want to commercialize that idea. You want to make that idea into a successful business, okay?
Yeah, but I need money to do it.
Absolutely. Funding is key. You can have the greatest ideas in the world. If they're not commercialized, if you don't have money to fund them, they're worthless.
Correct. Yep.
Yeah, great. Okay, how I would start is, as I said, put a lot of effort in that idea. Whatever that idea is, so you said renewable energy storage, okay, ensure that it works.
Yep.
Build a POC, proof of concept, okay, which effectively is a summary or small model of what you're trying to achieve.
So if I can build something that's very close to it,
Yep.
which is quite small because I've got no money.
Yes.
Okay, so yep, I've been researching for the last 5 years. So, we know what we're talking about. We've got a small team of experts behind myself, and we know what we want to do. So I've pretty much got something where you can see it working, and it's like, wow, this really does work.
Okay, so yeah, I'll just take it a step back. So I was lucky enough to live overseas for a year, and I really understood to a point. I've got a lot of experience in venture capital. So this is effectively venture capital we're talking about. So funding venture opportunities.
Right.
It's a very crowded space. There are, I was going to say million, but there are thousands of people trying to achieve whatever area that you're trying to achieve to succeed in. Okay, so you're doing renewable energy storage. Now, you just Google, there's probably thousands upon thousands of people trying to achieve that ultimate goal that you're trying to achieve.
Right. Yep.
So, having this idea, needing funding, how to stand out, how to make it work.
Yes.
It's not simple. It's a crowded space, not simple. And the hardest part is how to attract that funding. Okay, so there's only finite, which means limited, number of financiers out there, people that are willing to fund at the very, call it, raw level, as I call it, venture opportunity. Okay,
But won't my bank do it?
no, definitely not. You have to be proven.
But I've got an account with them. I've got a house, my mortgage is everything.
Not a chance. So the big bank will not fund. There's only a specific funder who has the appetite to do it. Okay,
Right. Okay.
so your bank won't do it. So you start off really, it's called bootstrapping. You're funding it yourself.
Yes.
Okay, this is a logical progression. You're funding it yourself.
Friends and family.
Yeah, so bootstrapping yourself, then friends and family.
Yeah.
Okay, and then you're going seed capital. It's called seed is the initial, so you plant a seed and it grows, right?
Yep.
Seed capital, you go to an organisation, funding organisation out there that may give you $25,000, $50,000, maximum $100,000,
Right.
to fund the idea, and they usually do it on an equity basis. So there's two ways to fund anything: debt and equity. To explain, debt is you borrowing.
Right. So I owe them that money.
Yeah.
Okay. Yeah.
And for that opportunity, you have to pay an interest. So let's say you want to borrow $10,000 from me.
Yes.
So I may charge you 5% per annum, 10% per annum. Yes, that means at the end of it, you have to pay me back, let's say 10%. You want $10,000, $11,000 after a year.
Yep.
Okay? Or equity, I may say, if I believe in your idea, if I'm a funding organisation, I believe in your idea, I'm a seed capitalist, I'll say, you know what, I'll give you $100,000.
Yep.
I value your company today.
Yep.
Today with the ideas and what you have, and you've proven it in POC, and you've got a fantastic IM investment buy deck out there that explains the opportunity out there your competition, where you think the revenue will be and the expenditure and profitability over a period of time, etc.
Yep.
Effectively, SWOT analysis,
Yes.
weaknesses, opportunities, threats of the business.
Yes.
If I believe in it, I say I value company today at, with zero revenue, let's say $20,000, and if you want $10,000, I want 50%. Shark Tank. Just think of Shark Tank, TV show. I want 50% of your business. Are you willing?
No, I'll give you 5.
Well, I'll say, well, thank you very much. I'm not going to give you anything. We have to come to an agreement.
Okay. Yep.
If anyone's familiar with Shark Tank, that's very similar to what real life venture capital funding is, or seed funding is. Very similar. So you've got the panel there, they say, I value business at this. So you want 10 grand, I value business at $20,000, I want 50%. Are you willing to do it? No. You may say, okay, how about I give you 30% of the business, I keep 70, and I'll say, you know what, okay, I agree, we'll shake on them, that's it. That money that I'm lending to you either will work or won't work. It's a binary outcome, right? So if it doesn't work, well, I've lost that money. There's no recourse on you, zero recourse on you. Your business doesn't succeed, I've lost my money.
Yep.
Okay,
Life goes on.
Life goes on. I'm disappointed, but hey, my level of risk allows me to do that. Like I've thought about it, I've done an analysis on the business, and I say, yeah, should have succeeded, fantastic, happy days. I've got equity, I've got ownership in your business, and I'll generate profit in the future as a result of that. Should have failed, tough. I realise I've made that decision. Okay, or as I said, debt structuring. That's where you borrow. But you can't borrow from a bank. You got to remember, it's quite limited. These people will offer.
Okay, so if you have a great idea, that's all well and good, but without the funding, you have nothing.
Zero.
Okay, so even if it's going to cost me 50% of the company, 50% is better than nothing.
Correct.
Once negotiations, it's really a negotiation. So first of all, you need to prepare yourself. You need to ensure that you've got a good product, because these funders, they're not silly.
No.
They're very savvy.
And they get hundreds upon hundreds of opportunity a year.
Yes.
They put on their desk and look through it. They're very critical, and they just go through it. All they go through is, at the beginning anyway, is just kind of slide sheet, right? So in the presentation, if something's a bit, amiss or a bit too positive, a bit too exaggerated, they'll just put it aside.
Yep. In the bin it goes.
Absolutely. There's so much opportunity out there that they're really looking for, the one that they genuinely believe will succeed.
Gotcha. Okay.
And again, what you think is the greatest idea in the world, you need a market for it. Maybe the general market, don't see anything in it.
Yep.
They do a lot of focus groups, and I know we've spoken about this off camera. You've got to do focus groups, you've got to do a lot of research, both online and in person, to see if there's really an appetite for it.
Definitely. So I have the product where I've been lucky enough, I've found the right funder, we've come to a mutual agreement.
Yep.
I feel that he's torn my heart out, my kidney and
as he does,
my liver, but at least I've got the money.
Correct. With that money, what I would do if I was in your position, if you want $10,000, you need 10,000 or 100, whatever the figure is, whatever that figure is, probably add another 30% to it, or 50% at least to it. Why?
So if I need 100,000, I should go for 150.
Yes, absolutely.
Why?
Why? Because it's so much more difficult when that money evaporates, is used up, to go back to that funder. Better to get that in the beginning. You've done all that hard work at the beginning, trying to negotiate, getting to bed, so to speak, with him, doing the deal.
But do you think that 50% could be the deal that makes or breaks? And
No.
Oh,
Definitely not. If
Okay.
someone's willing to invest,
yes.
or to invest in
Yes.
your business, lending 100 grand or 150 grand is neither here nor there.
Okay.
They either lend $1.
Very interesting.
I would always go for at least 50%, if not 30%.
Okay.
Greater than whatever the figure is. It's called the runway.
Okay.
To see you through that much longer, because no one knows what the future is. There's always going to be issues come up. There's always going to be, forget, this expenditure.
Unknowns.
The unknowns, and there's more unknowns than we all like. Yeah.
Yeah, without a doubt. Okay, so that's great. We hope you've enjoyed that.
Yeah, it's an interesting one because that is the most difficult from my little experience. That's the most difficult part of people's journey is how to get that first dollar to fund their idea.
We hope you've enjoyed this podcast on funding.
Funding your venture.
Any questions, please post them. Look forward to seeing you next time.